Okay, no problem.
So you can see that break and retest works. Though at times you may be waiting for it may not come, but as it's going, you continue to follow that price. And you remember, you are not only analyzing only one particular currency pair. There are a lot of them. So if you don't see your trade in one currency pair, you can move on to another currency pair, see if you can see a clear pattern of break and retest. Then if you don't see that, you can move on. And before you know it, you get one currency pair that will give you a particular pattern that will enable you to trade your own strategy. You understand what I'm saying? Now, another way that we can identify the trend, I mean, that the market is in currently, is by plotting moving average on your charts. That's what I'm saying. Moving averages are lines you see on your chart. They are very, very dynamic because they follow price. Though you should not rely on them, but they give you hints as to what the market is doing because they collect their data. Moving averages collect its data from the price that has formed in the market. So now if you use 20 period moving average and you are on a daily time frame, that tells you that 20 period moving average simply means that that particular chart we aggregate 20 days candlestick and give you the average. So if you are on a 1 hour time frame and you use 20 period moving average, it means it will sum up 20 hours of trading, the prices for 20 hours, and it will give you the average price. And you know, at times when you know the average price, you can determine what the market will do next. Because on a normal day, you can look at it from averagely, it travels at a speed of 60 kilometers per hour. Then you can say, if it's driving, then it will be revolving around 60 kilometers per hour. You understand that? So because you have an average understanding of the average speed limit the person is making, so that is what is done. So for you to install moving average on your chart, you go to your indicator. You can see where I'm clicking here.
Yes, sir.
You click on that button there, then you click on moving average. If you don't find it there, you go to trend, then moving average. Yes. Then once you get there, you can install 200 moving average. 200 moving average is a moving average that, I mean, most people use in the market. And I will tell you why most traders use it. So let me change this color so that we can see to that. Can you see that black line?
Yes, sir.
Now, what it means is this. 20 period, 200 period moving average is it sums up 200 candlesticks, the prices of those 200 candlesticks, and give you the average. That's what it has done. So it means the way to use the 200 moving average is that when price is trading below the 200 moving average, you are in a downtrend. And you see, when price is below it, you can see what is happening. Price is falling, right? Price is making lower high, lower low, lower high, lower low, lower high, lower low. You understand that? Now, and when price is above it, when price is trading above the moving average, you are only looking to buy. You understand what I'm saying? Now, I will give you a strategy now, though it's simple, but it's good for people who don't have time to check their chart from time to time. We call it mean reversion strategy. What do I call it?
Mean reversion strategy, right?
Mean, M-E-N, mean as an average. Mean reversion strategy. What the mean reversion strategy simply means is that you're taking price, you are taking your trade at an average price. You see what I'm saying? So
Okay.
what it simply means that you will plot 200 moving average on your chart, and you will wait until price come back to that 200 moving average. Then you continue to look for price pattern. Then you trade a long line. Let me give you an instance.
Please come again, sir. I'm trying to jot down something.
Yes, okay, no problem. Now, the mean refashion strategy, what it means is this. You plot 200 moving average on your chart.
Okay.
After you've done that, if price is trading above the 200 moving average, you are only looking for buy position. And if price is trading below the 200 moving average, you are only looking for sell position. That is taken.
Okay.
Now, the mean refashion strategy itself, what it means is that you will wait until price breaks above or below the 200 moving average.
Okay.
Let's say, for example, price broke below, or let's say price broke above the 200 moving average. Price broke above the 200 moving average. You are now looking for buy position. You understand what I'm saying? No, for example, now price in this situation now, price has broken below the 200 moving average, right?
Yes.
But you will wait until you see price moving very closer to the 200 moving average. And around that, you will be looking for rejection pattern. And if you look at what has happened here, if I box this out, this is an engulfing pattern that happened around the 200 moving average. Can you see these two candles here?
I can see it, sir.
Let me blow it up so that I can see properly.
Yeah, I can actually zoom from my system and from my phone.
Okay. Okay, good. So, just a moment, please. So this I'm looking for that scenario that we created now. So
I think.
Okay, no problem. Yes, the scenario is easy to get. So
We can make use of another one.
Yeah.
Okay, I think here is one. Okay,
Yeah.
I think that's it exactly.
Yeah. Which one? You mean this one?
Yeah, that one. Yes.
No, it's not.
Though
it's a scenario.
Really?
It's a scenario. Can you pick? For example, now, when we when we get to the 200 moving average, yes, price has broken below the 200 moving average. Yeah, and you are waiting, and you now see price coming back to the 200 moving average. But the next thing you see when the price got to 200 moving average, what happened? You see a doji. Can you see that doji?
Yes.
That's a signal for you that price is being indecisive. That is, it's neither going up nor falling down. So neither the buyers are winning nor the sellers are winning. So you want to wait to see what will happen next. Then at the low of this candle, you try to look for sell position. You know what I'm saying?
Yes.
At the low of this candle, this one here, you start to look for, and your stop loss will be here. Let's say you take your trade from here. Your stop loss will be above the 200 moving average. You understand that? That's about 9 pips. That's about 9 pips or 10 pips. Then it gives you how many pips here? It gave you 83 pips. No, even 90 pips.
88. Almost 90.
That's 90 pips. That's 90 pips. So 90 pips, and you're risking only 10 pips. So it means you risk $10 and you're making $90.
$90, yeah.
That's 1 to 10.
10.
So you can see. So this is this strategy is good for people who are very busy at work, so that you can just open your chart and see, okay, it has not gotten there. You don't have time to look at the chart regularly. So it's good for people like that. So, I've not told you this before. I didn't share this strategy with you before. I've used it separately to make money in the market too. You understand what I'm saying? Yes.
Yes, sir.
So I'll just place my trade because I've already decided on how much I am ready to lose. So I don't need to be checking my chart again. You understand what I'm saying?
So just enter your stop loss and take
I just
profit
enter my
and
stop
come
loss
back
and
and
leave.
check it.
Yes.
Bam.
So because I already
Okay.
decided that, for example, I want to lose $100. For example, I can risk about, say, $50. So once I put in my stop loss, I forget about that money.
Okay.
You understand what I'm saying? Because you have
Yes,
told the market that this is how much you are ready to lose. So there's no need panicking again, like, it will hit my stop loss. No. Because trading is about...
Listen.
Yes, thank you. Trading is about winning and losing. Do you understand what I'm saying?
Yes.
Aha. So that being said,
winning big, losing small.
Yeah, you want to control your loss to be as small as possible, and you want to win as much as possible. You understand that? Now, let's look at another one. Look at this. Even look at this one. Look at this one here. Look at this one. You see that when price returned to the 200 moving average, it rejected twice. Can you see this one? This one? These two candles that has 2 weeks. Let's say you enter your trade.
Okay.
You see? Let's block this out. Can you see that?
Yes, sir.
Then you enter your trade from here. Your stop loss will be about 17 pips.
17.
Yes. Then, because that will be above the high, right? Just 1 pip or 2 pips above the high. Then it gives you about 25 pips. That's about 1 to 1.2. You understand that?
Yes,
so which is still fair. So if you risk, let's say you risk $17, you are looking to make about $22 or $23, which is fair. You understand what I'm saying? So now we've now broken above the 200 moving average, and you are looking to trade the mean reversal. So you wait until price return to the 200 moving average, and you see it returned here. And when it returned, you see that we have right here, we have an engulfing pattern right here. Can you see the pattern here? So you, after the engulfing candle, the candle that engulfed, you enter your trade when you close. Then your stop loss will be about 14 pips, let's say 13 pips. Then let's say, for example, you are looking to take profit around this high. So you take your profit around here.
Okay.
That's about 35 pips. That's about 1 to 2.3.
Yes.
And at the same time, if you have not taken your profits, look at what happened. It took you up to 72.
72 pips.
So when you look at that, that was about 1 to 6. You see that? So you are only capitalizing on the mean reversion strategy because the 200 moving average is what the institutions are using.
Wow.
Yes. So they use it. Though you can meet some other people who say, I don't use moving average. They try to be fancy with their trading. Anyway, anybody can trade markets anyhow. But what is important is understand your rule and understand your own strategy. Don't look at another person's strategy to trade your own market. You understand what I'm saying?
Exactly.
Once your own strategy is paying you back very well in the market, you don't need to care about the next trader because trading is a lonely journey. It's your own journey. You are the manager of your own trading account. You understand what I'm saying? And any strategy you are using that is giving you return, then keep it. You understand what I'm saying? Now look at this one. Once I see price breaking below the 200 moving average, I know something is about to happen. When a full body candle close below the 200 moving average, I know something is about to happen. So like this one now, you know, I will never take a buy position again because it has closed below it. You understand what I'm saying? So I will just wait and see what they want to do. But when you look at this place, you can have mixture of strategies. Look at what happened. We broke this low here, this particular low. Let me mark it. What happened? Break and retest.
Market came down.
You see that?
Yes, sir.
Aha. So and you see that is a kind of one-to-one risk reward. Let's say you enter your trade here, because this is where you are looking to enter your trade. If it is break and retest, though we have discussed that before, but I saw it, I just say, let's discuss it. This is about 29 pips, stop, about 30 pips stop loss on top here. Can you see that? Then
yes, sir.
You are here, 43 pips take profits.
Yeah.
Can you see that?
Yes, sir.
So even if the market give you $10, it's enough. Market does not hold you cover. So market is being fair to you by giving you money. You know what I'm saying? So let's go again. Now we close above, we cross above the 200 moving average now. Then we came back, we tested the first time, we rejected, second time we rejected, third time we rejected, fourth time we rejected. This is a signal that this place is being rejected. Then the moment you see a bullish candle that is a decisive candle, you see that these are shown intention that they are ready to go up now, because this candle is longer than the rest. Then you take your trade from here. I'm just showing you mean refashion, how the beauty of it. Your stop loss will be below the 200 moving average. Yeah, that's about 20. Let's say it is 20 pip stop loss, right? Then you take it up to this level here. 20 pip stop loss to 106 pip. Take profit. That's about 1 to 5. So it means if you risk $20, you are making about
$106.
Yes, if you risk $20. So let's say if you risk $100, you are looking to make, say, $500.
Okay. Yeah.
Do you understand that?
Yes.
So that is just, so if you risk, let's say if you risk, for example, now you enter here at one standard lot, right? And one standard lot is equal to $10. So by the time it hits your stop loss, you will be losing $200.
20.
Yes.
Oh, yeah. 200.
Because one standard loss is $10. So 10 times 20 pips is equal to 200. That's your loss.
Exactly.
So if you lose in the market. Now, if you make it up to this level, let's say you may make it up to 100 pips. That's what I'm saying. So 100 pips, that would be $1,000. That's $1,000 gallantly. And $1,000, if you convert it to Naira, that's about 450,000.
Yes, sir.
So in a spade of, let's see, in a spade of, let's say in a space of 15, let me mark this level here so that we know from here. From here, take your trade from here. So let's go to 1 hour time frame, because this is 30 minutes.
Okay.
I think it's in the, is it okay?
I think it's around something around February or so.
February?
I'm not sure. Maybe you should check the list of objects and then check the number it is on the chart.
Yeah, don't worry. Okay there.
Okay.
Okay, I'm here.
Okay, so it's okay.
Yeah. So it's actually February, like you said. So
yes.
In how many hours did we make $1,000? Let's look at it. If we enter our trade here, in about 10 hours. So in 10 hours, you make $1,000 if you have the kind of money that to trade with in the market. And
yes,
if you're working for someone, you will spend, to make $1,000, you will spend like 1 month if you are well paid where you are working.
Yeah.
Because that's 450,000, right? Let's say the person is paying you 400,000 naira monthly. So you spend 30 days. And in 10 hours, market give you that 450,000. You can see the beauty there.
Yes, sir.
So if you learn this art, it will help you, one, to be financially independent. Two, you will not wait for salary before you spend. And three, you can retire as early as possible in life. Because you can start making money from your home bedroom. Do you understand what I'm saying?
Yes, sir.
So I hope you got that mean refashion strategy now.
Yes, sir.
So let's go back to 30 minutes. So we have looked at all this. So let's look at some other one. Look at break and retest here. Very clear. Very clear break and retest. Can you see it even without marking it? Can you see that? Let's mark all the break and retest. We broke this level by this again. This is the low. Can you see?
Yes, sir.
It means you have an opportunity of, oh my gosh.
Entering even after the moving average has crossed.
Yes, now. You see that? Look at this one. We didn't get there here, but you can see this rejection pattern. You can quickly take the trade. You saw what I'm saying?
Yes.
And look at it. So even when you take mean refasten here, let me delete all this. But we're no longer discussing what I call it, break and retest. Even when you take mean refashion strategy here, look at this place. Price got here, broke here, and then let's say you take your trade around this particular candlestick here. For example, let's say you even wait for mean refasten. You enter your trade. Let's say you enter your trade here, and your stop loss is here. That's much. On top of this, this particular guy here, which is the next swing high, right? Now, when you look at this, that's about 24 pips. Then you take your trade down. 24 pips to 150 pips.
That's
Can you see that? So if you reach $24, let's say you are trading at $1 per pip. So if you reach $24, it means you are making $150 in the market.
Yes,
which is very, very crazy. So these are the strategies. So I've given you, we reworked, we revised the trend analysis this morning. We have revised the break and retest strategy, and I've given you another strategy this morning, the mean refashion strategy, right? Now, the next thing that I will introduce to you is what we call relative strength index.
Okay.
Relative strength index. You go to your list of indicators. You go to oscillators. Is an oscillator. You come here, relative strength index. Now, the normal, let me reset it. The normal way it comes, the default setting for relative strength index is 14, period of 14, and it always applies to close. When you go to levels, so the level is always, let me reset it. The level is always 30 and 70. So when you go to visualization, it's always on all time frame. That is when you install it, it should appear on all time frames on that particular chart. You click OK. I hope you see it here.
Yes,
this
sir.
is 70 level. This is 30 level. Now,
okay.
The rule of using relative strength index is that your 70 level is an overbought level. That is, the price of that asset is too high and it may fall. Overbought.
Okay.
The 30 level is oversold. Oversold in the sense that the price of that asset is too cheap, and the market players may consider taking the price up. So the normal way people trade, I'm telling you the way people trade, and I will tell you the normal way to trade it, the right way to trade it. You understand what I'm saying?
Okay.
Now, the normal way people trade with relative strength in the Rsi is that they wait for price to be overbought. When it is above 70 level, it's overbought, they will not be looking for sell. And when you take your cross here, let's look at this. It's at above 70 level here. When you look at it, around 77 here. And they are looking for sell. Now, let's say someone now enters sell here blindly. What happened? He wanted the market to sell, but what happened? Market move up in about 50 pips.
Okay.
So the person is already losing. You see what I'm saying? Though the market later came down. But what if you have an extra filter? You see what I'm saying? Look at another thing. Look at another thing. When the market is below 30 level, you are expecting the price to go up, right?
Yes, sir.
Now, here, we are below 30 level. What happened? That is below 30 level. Is the price going up? No. The price is going down. And even you can see that if you want to trade a kind of up here, you don't have any confirmation, because even the price has crossed below 200 moving average. And once it has crossed below the 200 moving average, it's signal to you that price is in a bearish trend.
Yes.
You know, you are only looking to sell under the 200 moving average, and you are buying above the 200 moving average. You understand that?
Yes.
So now, how do you now use the Rsi to your favor? You know what I'm saying? The way to use it is we will change the setting. You know what I'm saying?
Okay.
We will change the setting to fit a need. You right click on it, you go to Rsi 14 period properties, you go to parameter, you change this to 10 instead of 14. Okay. Then when you change it to 10, you go to level, you change the level, double click on that level, you use 20.
Okay.
You're oversold, and 80 overbought.
Okay.
Normally, when I'm doing conservative trading, I normally use 15 and 85 because it oscillates between 0 and 100. So the sum of these two should be 100. So when you look at this place, the parameter here, you see 100 here. You see that? Okay. So it oscillates between 0 and 100. So you're overbought and oversold. But I will advise you put your own to be 20 and put your overbought to be 80. What it means is that you have given the market enough room to breathe. So if it can reach 80, there is tendency that it will start falling from there. Let's look at it. Okay. Then let me change this color so that it will be very, very glaring. Let's change it to black also. Then I say, okay. I hope you see it.
Yes, I do.
So now, let's now look at the same thing that we saw the other time. At this level here, this is 85. It even got to 85. Can you see that? Now, I will give you
it at the right corner.
What did you say?
So yeah, you can see it at the right
you
corner.
Can see it. Yes, you can see it. So the thing is this. We will be using what we call Rsi divergence.
Rsi divergence, okay.
Divergence. Divergence simply means that, for example, price is going in an uptrend and your RSI is going in a downtrend. That is divergence.
Okay.
If price is going in a downtrend and your RSI is showing an uptrend, that's a divergence. You are expecting that your RSI should be doing the same thing that your price is doing in the chart. So if there is an uptrend, you expect the RSI to be in an uptrend too. If there is a downtrend, you expect your RSI to be in a downtrend too. You understand what I'm saying? Now,
yes, sir.
Why we use divergence, the secret of divergence trading is your RSI might have told you, might have informed you secretly that the price is about to change. That is the reason we use divergence. Okay. You understand what I'm saying? So let's look at it. Sir. Now, when you look at what price is doing here, price is doing higher high, right?
Yes.
Look at your RSI.
It's doing higher low. So it's doing low and low.
Can you see that?
Yeah. Yes. Wow. Okay.
You say wow. So you have to train your high balls to see it. And that is why I'm showing them to you.
Okay.
You now see that all the foundation we built in the past, if we don't build those foundations, you will not be able to grab all these things.
I can understand this. Exactly, sir.
So that is why whenever I want to train anybody, and if that person is not ready to go my way, I just tell the person to go off. Because I know where I'm taking you. You don't know where I'm taking you. So, and I must build the foundation very solidly in such a way that you'll be able to take anything I'm building on it. You understand what I'm saying?
Yes, sir.
So you see, this is divergence. Price is doing higher high, but your RSI is doing lower low.
Lower low.
Or lower high. You see what I'm saying? Then, having seen this, then somewhere around here, I can now confidently, once I see a bearish or bullish engulfing, you see, look at this candle, this red candle here. Let me get this cross share. This red candle here, you can see this candle here, engulf this green candle.
Yes,
you can see that. Once I see that, I'm okay, I'm ready to trade now. Then I can place my stop loss on top of this wick, about 24 pips. You see that?
Okay.
Then I take my trade confidently. Even if I'm stopping at 200, 24 pips stop loss, then I'm having about 80 pips profit. It means if I lose 24, I'm ready to lose $24. Then I'm making $80. You understand that?
Yes, sir.
It means I'm ready to lose $240 if I'm taking trade at the rate of $10 per pip, and I'm making about $800. You can see the beauty in this. So everything you need is sitting before you. You see what I'm saying?
Yes, sir.
Everything you need is sitting before you. So you can see that combining this to your trade will give you an asset into what is actually happening in the market. You don't want to trade RSI the way other people are trading it. I just give you one way I use RSI. Now, another thing that we have to do is I will add another level to the RSI. I will click on add and I will put 50 level. I will tell you why I put that 50 level. Anytime my RSI is above the 50 level, I know it's a buy position. And anytime my RSI is below the 50 level, I know it's a sell position. Let me bust your bubble. Let me show you something that you have not seen.
I'm confused with this. I'm trying to jot it down.
You are jotting something. Okay. Do you want me to take that again?
No, don't worry. I got this. When the price is above it, it is a buying signal. So when the price is below it, it is selling.
Okay, yeah.
Okay, I'm done, sir.
Okay, good. Now, let me show you something that you may not have seen, and you will be surprised how all these things converge. And you discover that combining all the skills and the knowledge that you have gained will help you make money in the market. Look at this. This is a 50 level, right? Here.
Yes, sir.
Price broke below it and do what? Retest it.
It retested it.
Okay. Right? Like break and retest,
yes,
right? Right?
Yes, sir.
Now look at where price broke. Price broke this level. Price broke around here. This is where we are. This red candle, this candle here. Then look at where it retested.
Oh, there's a confirmation with a candle over there. Wow.
Can you see that?
Wow. Yes, sir.
Aha. And it's below 50. It's now below 50. So I'm looking to sell.
Wow.
You see that? RSI, I told you, RSI,
yes,
though is above the 200 moving average, but RSI has shown you that we are below 50, the 50 period here, the 50 level. And you take your trade. So you can see that. So, and once you are below this level, you are only looking for sell. So look at what happened. Price came down. Now, look at this place. Price is doing lower low, right?
Yes, sir.
Then RSI is doing higher.
High.
Can you see the power of divergence?
Yes.
And
sir.
what happened after that? What happened after that? When you see this, can you see this? Can you see it match with this candle?
Yes,
now,
I can see it.
Can you see it? The price went up, and you can quickly scalp that and take some few profits.
Yes, sir.
Sorry, let me. I don't know what's wrong with my mouse, and it's a new system. Okay, wow. You can quickly scalp that. Can you see that? Even since then, price never returned. Sir. About 87 pips. Can you see? So that is just it. So I hope you picked that. So we discussed RSI this morning.
Yes, sir.
And I'll show you not to rely on RSI maybe because it has gotten to overbought or oversold to enter a trade. No. Yes. Just look for divergence and look at what price is doing. In fact, the RSI is just something you need for extra confirmation. The main thing that you should focus on is what the candlestick is doing, what the price is doing. And once we plot your 200 moving average, you want to see that if you are trying to trade mean reversal, look at mean reversal strategy here. Price got to 200 moving average, and you see this impulsive candle, this long candle here. You see this?
Yes, sir.
And now you take your trade with a stop loss of about, say, 43 pips. Let's say 43 pips, right? And you take your trade. Oh my goodness. 142 pips. So you can see that everything you need is before you. At least I didn't manufacture the charts. These are past price actions. You see what I'm saying?